Hello there, this is fairbinaryoptions.com. Euro and Australian dollar daily chart in front of your eyes, and you might ask why we are looking at such a pair. Well, first of all, it is weekend, it is Sunday, and second of all, we are trying to prepare the road for next week or the trip for next week or what to trade for next week. Euro Australian dollar seems to be a nice setup. The reason for that is twofold. First of all, we are looking from the move to the downside here on the daily chart. Again, we are looking from the move from the 116, and take a look at the price. Price traveled well above the 150 area. Well, I don't think that price actually went all the such a distance towards the 150 only to pierce it for something like I don't know, 30 pips. I don't think so. And in terms of Elliott waves, I would label this one as this being the first wave of the whole move. And then this to be the correction for it, for the second move, for the second wave. So 1, 2, and then we are looking for a third wave to the upside, and this third wave to the upside is done most likely with the previous high, the one before the 150 area, and basically into the 49, so 149 something it was here, almost 150. And from that moment on, from our point of view, that is only corrective wave. So 1, 2, 3, and now we are looking for a fourth wave of the same degree. I don't think that the fourth wave is done here. First of all, it looks like an irregular flat, A, B, C. Well, it is most likely not. Why? Because the fourth wave and the second wave, according to Elliott waves theory, you need to have the principle of alternation between the two waves. They should alternate at least in one of the following: the severity of the move, the time taken for the move to form, the construction. Well, it might be that you have two different irregular flats, this to be the first one, this to be the second one. However, I strongly doubt that, and because of that, I'm looking at a contracting triangle, so a possible contracting triangle that started all the way up here. The reason for that is the fact that all the retracements are almost the same. So now we are looking for wave A here of this degree, then to have a B wave to the upside, and then to look for a C wave to the downside. And this C wave to the downside, I don't think it is done here with the lows. Why? Well, that's a very good question. But the problem with that move to the downside is the fact that it is channeling too well. Because it is channeling too well and corrections here are almost the same, as you can see here, almost the same, it implies that our leg of a triangle, or the possible leg of a triangle, will be done here. So we already have the A, B, and C, and now we should look for the D wave to the upside. And this D wave to the upside should retrace most of the C wave, of the length of the C wave. So normally the Fibonacci retracement should not go from the absolute low there, but it should go from the lows from here to the highs in the B wave. And price should go the other way around anyways. Price should go 61.8 out of the whole move at least. Why at least? Because legs of a contracting triangle normally travel beyond the 61.8 level, even into the 70, or even into bigger, let's say, retracement levels. So you have A, B, C, the possible D. Now you might ask, okay, fair enough, this is good, but why to label the C wave here, and why this move to be the downside here? Of course, this is not the end of the fourth wave. First of all, the move here to the downside looks like an impulsive move. You have 1, 2, 3, 4, 5. Let's try to label it. of a lower degree, of course. The second wave here, the third wave to the downside, and most likely an ending diagonal for the third wave, for the fifth wave, sorry. So 1, 2, 3, 4, and then a fifth wave to the downside. You might ask also, how come a five-wave structure in a leg of a triangle? Well, this five-wave structure is only the C wave out of this whole A, B, C, and an irregular flat, as you can see here, from the moment the third wave is done. So wave A, B, C out of the contracting triangle is done, or maybe actually only wave A of a bigger degree to be here, and the first leg of a triangle comes in the form of a flat. This is, let's say, not that common, but it's not impossible. So why not this to be wave A? If this is wave A, and this wave A is being formed out of A, B, C's out of this degree, then we are looking for, of course, for the B wave out of this degree to come, to retrace more than 61.8, so price to go above the 147 again. And it should be formed out of three waves, A, B, C. Well, I think this is wave A. It comes in the form of a threes, as you can see here, A, B, C, wave A. Then we are looking for a B wave to the downside. Make no mistake, this is a B wave, a corrective move for the B wave. And of course a C wave now looks to come to the upside, to go beyond the 61.8% retracement level, and this C wave should be formed out of 5 different waves. 5 different waves, meaning either an impulsive move or an ending diagonal. Now, what's to do, what's to be done when you're trading binary options? Well, first of all, we should wait for this trend line to be broken. This is going to be the play for the next week. Wait for this trend line to be broken. By the time this green trend line is going to be broken, we are going to engage into buying calls, and attention, we will buy the calls not for 1 week expiration date, but we will buy the calls for end of month expiration date. That means 31st of October, like any broker normally allows you to. So buying calls for end of month expiration date, and this is going to be our play. Let me make this one blue like this, for end of month expiration date, and this to be valid after the green line, the green trend line is broken. This is our strategy on the euro and Australian dollar. Really don't think that the 150 area has been pierced only and then price to go to the downside. The structure of this move here is corrective, and we are looking to buy calls by the time the green trend line here is going to be broken. It remains to be seen. This is what I wanted to show you for today. Keep in mind, this is fairbinaryoptions.com, and all our analysis and recommendations are brought to you by our general sponsor, Lioneye.